what's a good way to get started with stock options? Are the returns better than owning shares? Good. Yes, the returns are better than owning shares because an option is the option to buy 100 shares. So you're basically magnifying everything that would happen with a share with an option. There's so many different approaches. So I'm not going to suggest one way or another as far as what you should do. But you should definitely look into it. There's a lot to learn before you start getting into the options. And there's not any one option that you should do for any given situation or that you should do for all situations. So like you may do a certain types of option trading in this situation, certain type in this situation, certain type in this situation, and maybe you fluctuate between that and other ones. I mean, there's really so many different ways to approach it. But from what I've seen, from a cash flow perspective, options are the way to go. I can much more easily maximize my cash flow by the use of options because getting to control 100 shares costs a lot less than actually buying 100 shares. Costs a lot less. And the impact of actually owning 100 shares and the movement on those is lessened. The movement is lessened because the option that you buy doesn't move exactly with the stock price. So if you own 100 shares, the stock price goes up $1, your profit goes up $1, or it goes up $100, right? But if you own one option, it's going to depend where, or if you have a call option, it's going to depend on where along the spectrum that you bought that call option, because you could actually buy that option at any strike price, most any strike price. You're going to be limited. But depending on where you bought the stock price, deep in the money or out of the money, the delta of that is going to determine how much the value of that option changes based on each dollar that the stock moves. So you might have a 50 delta, which means if the stock price, the actual share price goes up $1, your option only goes up 50 cents. Now, you might think, oh, well, why would I do that? I mean, if it goes up, I want it to go up all the way. Well, it costs you less. It costs you a lot less to have control of those 100 shares. And oftentimes, you could control for the price of buying those 100 shares. If you're doing it on the same day, you might be able to control 1,000 shares or 10,000 shares for the cost of just owning 100 shares. So going up 50 cents then, or going up $1 if you owned those 100 shares, you could go up $10,000 or $1,000 if you owned the options. So from a cash flow perspective, I mean, it's also a quick way that you could go broke really fast if you make some bad moves. So this is why you've got to look into it. You've got to look into it and you've got to learn a way that you're comfortable doing it. Okay? Oftentimes, those naked calls, naked puts, bad moves. Because if you choose the wrong direction and the values, there's a thing called theta, which means you're losing value every minute that you own that option to buy something until it expires. There's a time component that you're paying for. Every time you buy an option, you're paying for some of that time component. So you've got to be aware of that. The closer you are to the expiration, the faster it closes, the faster that time component value reduces. So you got to be aware of that. But there are other options. There are ways to protect yourself. There are safer ways to utilize options. And a lot of that is things called spreads. So you might buy an option at X price, and then you'll sell an option either above it or below it, creating a spread, which limits your risk. So it'll limit your gains as well, but you take the good with the bad. But we can get some really good returns, even with those limited returns, even with limiting those risks and limiting the upside. So I'm looking at some of the spreads that I've been doing. I'm getting like, you know, you can get maybe 10% return in just a few days, which is really solid. 10% return on the risk that you put into it. So I might risk $500 and I can get $100. That would be a 20%, and I've done that. I've done that a couple of times. So there's some really good ways to do that. And my risk in that situation is $400 because I get to keep that $100. So there's a bunch of different ways to do it. If you're interested in more of that, join our Patreon group. Join the mastermind because I put these videos in there. Well, I put my strategies, what I'm doing in there, so that you guys can see. Because I can't tell you to do one way or the other. I'm not licensed to suggest how should you be investing in the stock market. But I'm happy to share with you what I'm doing and do it in depth so that you can hopefully accelerate your learning process. If you just join the $1, I think you can get into the stock options education channel that we created in our Discord by just joining the Discord channel for $1, being our $1 patron. We're putting in there videos that we find that are very helpful in learning stock options education. We also have a market education channel where we're going to put in videos, or there are some videos in there that will just basically teach you about investing in the market. So there's so much out there. Now you could do all this stuff on your own too. It's certainly free. You don't have to join our group. You can just go to YouTube University and just start watching everything you can find. It's just not curated. It's just not curated. So there's definitely value. It'll hopefully save you some time. Plus, if you ask questions in there, I will answer to the best of my ability. I hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time.
Now go maximize your cash flow.